Okay, let's jump in. We're trying to keep today under an hour, so let's go ahead and get rocking and rolling. We have a lot of really fun content from KeyData's 2026 Vacation Rental Industry Outlook. Really looking at what all of the professional short-term rental managers are predicting for their 2026 season. I know it's the time of year I always get asked to pull out my crystal ball. Over the last couple of years, we've turned that around and asked what's in everybody else's crystal ball for the future as well. So excited to see kind of what challenges people are anticipated, and what everybody plans to do about it, and excited to share that data. I'm also really pleased to be joined by Ann Gardner at VRMA, the Vacation Rental Management Association. VRMA has been a huge partner of KeyData over the last all of our years of operating as a company. So Ann, excited to have you here today with us.
Great. Thanks, Melanie. Good afternoon, everyone. I'm Ann Gardner, Executive Director of the Vacation Rental Management Association. It's great to be with you. And, I also want to thank our partners at KeyData for hosting today's Industry Outlook. It's a great event, and we are tremendously proud to partner with KeyData to bring data-driven insights that help professional managers strengthen their performance and profitability. And together, we're truly showing how professionalism pays off. KeyData's findings are clear in that VRMA members consistently outperform the industry, commanding higher rates, longer stays, and earlier bookings. And so those results reflect the value of belonging in a professional community that is focused on education, advocacy, and operational excellence. And so, in recognition, if you're not part of VRMA yet, I'd like to invite everyone today to join us and to use code KeyData26 for not only a great opportunity to join and be part of the community and advance your profession, but you will also receive a $300 value free with this code. And that is access to our new Vacation Rental Manager Professional Series, the Business Operations course. That is first and foremost and foundational for all of us. And so thank you, Melanie and KeyData, for your partnership and for everyone taking part in the event today.
And we had some of those stats too of exactly how much VRMA members outperformed their competition.
Yes, no, absolutely. Absolutely. And so we know, for example, the particular strengths are in pricing power, ADR. So VRMA members actually command 15% higher than non-members, and guest booking behavior is 35% higher than a non-member. And so those tips and tricks and industry insights and support are all part of what it means to be part of VRMA. And so we know that competitive advantage means that members are commanding higher rates. They're securing bookings further in advance. And this data is supplied by KeyData in our partnership.
And one of the really interesting things we'll see throughout the industry outlook, the survey results as we start digging in, is that most property managers, probably including the ones on the call, are really concerned about pricing, operations, and advocacy going into 2026. And I know those are all areas that the VRMA organization has continued to get more and more involved in.
Yes, absolutely. Absolutely. We've hosted some of our introductory meetings on some of these areas at VRMA 25 Las Vegas a couple of weeks ago. And so we're excited to really bring together our state and regional affiliate organizations to help advance our industry. And so that's going to be an exciting development from now and in the year ahead.
Amazing. Well, let's go ahead and dig in. I'll start with an introduction to myself, I suppose. I'm the VP of Data Analytics and Insights at KeyData. I'm based outside of Denver, Colorado. I've been with KeyData for about 7 years at this point, 7.5. KeyData, for those of you who don't know, we provide business intelligence dashboards and tools to help you better manage your property portfolio and also benchmark yourselves to the market. So I'm in charge of a lot of data stuff at KeyData, and I do a ton of speaking and analysis on trends in this space. So really excited to be here with everybody today and start digging into that data. Again, we're presenting our vacation rental industry outlook. So this is a survey we performed over the last couple of months. You're going to see responses from over 240 people across, every role at a professional property management organization. So CEOs, revenue managers, marketing, general managers, owners, everybody else. Managing luxury or owner relations, managing luxury, middle of the road, and budget units across 142 different markets. So we'll show you kind of how people are feeling overall, and then also break that down by management region and by property manager size, because what we continue to see is those really small managers have a much different experience and face different challenges than the big people out there with thousands of rental properties. So again, that's 240 or more respondents managing over 43,000 properties, based in the US at this point. Say overall industry is more solid than it has been, and just referenced the Verma International Show in Vegas that was about a month ago at this point, believe it or not. One thing I really noticed this year was that the general vibe, not measurement, that's not a data point, was a little more positive than it was a year ago. And we saw that in our survey results too. So really most property managers are anticipating stability or modest growth in 2026. It's funny at this point to be excited about modest growth and stability, but after a few consistent years of declines, I'm excited to see, optimism and growth in the forecast again for 2026. But, people continue to face these big challenges. Most people at this point are focused on operations and market pressures as the most significant challenges they're worried about. Regulatory issues playing a big factor there as well. And we continue to see that most property managers are going to prioritize efficient staffing, guest service, and property care in 2026. Obviously, revenue management really playing into that all as well. So that's the headline. If you don't remember anything else I say today, it's that we're feeling cautiously optimistic about 2026. A big factor here is competition. And so we asked our managers what their expectations were about the level of competition for their guests and their markets in 2026. In response to that, 42% of managers do expect to see competition intensify in 2026, and no one expects it to decline significantly. So we're not optimistic because there are fewer rentals and fewer managers and way more guests than we know what to do with. People out there are still expecting competition. We've got oversupply in some markets. It's forced occupancy rates down over the last few years. The OTAs continue to gain bigger share and have more listings than ever, right? It is easier than it was 10 years ago to rent out your extra room, your mother-in-law suite. So this OTA visibility is really playing into keeping market saturated as well. And so success in 26 is going to depend on occupancy capture, right? How do you get yourself in front of these guests and differentiation once you are in front of those guests? What's that secret sauce on your listings or in your management style that's going to get them to book with you instead of a host or another one of your property managers in the market? Again, that's a little actually less optimistic than it was last year on competition, which is interesting. So property managers are expecting slightly more competition in 2026 than they did in 2025. Only 8% of managers anticipate a decline in competition in 26 compared to 11% in 2025. Expectations for significant growth remain the same. And that flat to modest growth, both of those categories are about where they were a year ago. And so definitely continuing to see some shifts in competition, but people are expecting to have to be more competitive than they were a year ago. On a regional basis, we're seeing a lot of differences here. So this chart you'll see a few times. It's just the percent of property managers by region. The green colors and kind of teal are showing growth, so significant or modest growth. And then the red to orange are showing people who believe there will be a modest or significant decline. So one thing that immediately stood out to me here is this Mid-Atlantic bar, where most managers are expecting a modest to significant decline in competition. So they seem to think, and maybe this will play out, that there will be more guests and potentially fewer properties. And so not expecting to have to be the same level of competitive in 26 that they were in 25. On the other hand, the Midwest region is most likely to expect an increase in competition. We have continue to see more guests looking for those more rural, slightly more affordable, drive to vacations. And so I think we've seen an increase in guests looking for those Midwest, or looking to those Midwest destinations over the last few years. And it seems like managers are at this point thinking the market's pretty saturated with rentals, with property managers, and there will be an increase in competition in 26. The Rocky Mountain market continues to have most managers expecting modest growth or flat. Here, it's already super competitive, especially during peak seasons. A lot of these Colorado ski markets introduced pretty strict vacation rental regulations over the last 5 years or so. And so there's a lot of supply constraints there as well. And then Hawaii, competition's capped by regulation in some destinations, but there's still fierce competition among those operators in that market who are complying with those regulations. So again, really important to keep an eye on regional differences here as well. On a manager size breakout, it's pretty consistent here. And so most managers, regardless of how many properties they have under management, are expecting modest growth or flat competition in 2026. The big trend that stood out to me here is that extra small managers are more likely to expect a decline in competition. So 17% of extra small managers expected a decline compared to only 8% of extra large managers. And so, again, everybody feels those competitive dynamics a little bit differently. And it does seem the inventory size has a small part to play there. On the pricing front, so average daily rate is the average amount of revenue paid per guest night. We're seeing for 2026 that most property managers are expecting flat average daily rates. So about 44% said flat rates compared to 2025. And then modest growth, which about 45% of managers saying they were expecting modest growth in 26. So that post-pandemic pricing boom continues to be over, but we are starting to see a little more optimism here that there will be some growth in that market or in that metric for 2026. That's pretty different than we were experiencing at the same time last year. So if you keep an eye on that modest decline bar, it's much bigger it was much bigger in 2025 than it was for 2026. So 2026, only 7% of managers are expecting declines in prices compared to 19% of managers at the same time last year. 50% property managers are anticipating growth for 2026 compared to only 34% total at this time last year. So again, overall property managers having a more positive outlook for 26 than they did for 25 when it comes to prices and average daily rates. I'd say this one continues to be challenging because we're seeing shortened booking windows as well. Like guests are taking longer or waiting longer to book those stays, which makes it hard to really feel optimistic that rates will continue to increase. And so balancing a little bit of rate growth with that booking window will be a key challenge for managers in 2026. We're also seeing pretty big geographic differences in optimism for 26. On the left is showing by region which statement best describes their expectations about average daily rates across portfolios in 2026. You can see here that the Hawaiian Islands market, we've got 92% of managers expecting modest to flat growth. So a pretty big chunk there expecting rates to increase. New England is pretty split. So 50% flat, 50% modest growth. We're really not seeing any regions except for a little bit of the Rocky Mountains anticipating large growth in average daily rates in 2026. Revenue, on the other hand, a little more optimism here. You can see that the blue bars are smaller and there's not as much orange and red compared to rate growth. And so managers are feeling a little more optimistic about revenue than they were about pricing, meaning they expect to pick up that difference in occupancy and for more guests per property to really be driving revenue for next year. That Mid-Atlantic region stood out here with 33% of managers expecting significant growth. Again, those managers we saw a few slides ago also expecting a decline in competition, helping them increase their occupancy rates and driving revenue growth. And then New England feeling pretty bullish as well here. So 50% of managers there expecting significant growth and revenue. Again, not the same optimism there on rates. So it really seems like across these regions, people are expecting to pick up more occupancy, more guests in 26 than they did in 25. And that seems to be what would really drive revenue instead of nightly pricing. Some company size dynamics on the average daily rate front as well, with extra small managers and small managers expecting flat to modest declines. This is reflecting OTA cost, limited leverage on pricing, and then owner constraints as well. Medium managers are skewing towards expecting modest growth. They can have more tools and agility with larger teams, larger software budgets, and get to be a little more nimble there. And then on the large and extra large manager front, mostly flat to modest growth with upside linked to new owner acquisition rather than organic yield. So we have some other questions about that too. They're expecting their revenue growth to come from property and portfolio growth, not necessarily by the individual unit making more money. And then it was really interesting to start taking a peek at challenges people are facing now and what they expect to face in 2026 as well. So across the board, the top two challenges that property managers expect to limit their ability to hit 2026 targets are staffing and revenue and market pressure. So 73% of managers said that operations and staffing will be a challenge moving into 2026. I'd say this has been a challenge for a couple years now, and will continue to be in 26. So, a great time to take a close look at cleaning, operations, other pieces of operations, and staffing. I know, especially in seasonal markets, these can both be really big challenges. And then 73% of managers also worried about revenue and market pressures. So, people a little optimistic on competition and price, but it looks like property managers are still expecting to be feeling some pressure by a changing market. And then again, this is going to vary by company size as well. The ability to scale can really impact the challenges that people are acutely feeling on a daily basis. So small property managers tend to be a little more dependent on the OTAs, right? Like you get less foot traffic to your website if you have 15 properties versus 15,000. And so our small property managers are really feeling that marketing and distribution pain because of that dependency on the OTAs. Medium property managers are spread thin. They're facing staffing shortages and regulation cost. At this point, their property inventory may have scaled a little faster than their overall staffing and headcount. And so there's a lot to figure out with still a medium-sized team. And then large property managers are really concerned about operational strain as well. So running large teams in multiple markets, figuring out what should be centralized and what should not, continue to be a challenge for these larger management companies. And then even within these companies, people will face different challenges depending on the role they play within that company. So this chart, again, a little different than what we've been seeing. On the top here, you've got the role within that company. So our owner, operations, revenue, marketing, or other. And then on the y-axis, it's what they're most concerned about. Say we're seeing a lot of consistency here with most people, regardless of their roles, worried about both operations and staffing and the revenue and market pressures. So really consistent there with the same number of responses for both of those on the roll. So 70, almost 90% concerned about operations or market pressures. Marketing teams here are feeling the strongest about both of those. They are feeling the most squeezed. They're on the hooks for bookings in a saturated market, with a lot of them anticipating competition increases in 2026. And then worried, of course, about distribution across channels as well. So everybody send a message to your marketing team. They might be feeling a little stressed right now as they start to plan for 26. And then, continue to see a lot of folks, rightfully so, worried about regulatory challenges. So it's right now the number one factor affecting PM confidence. 47% are worried about strict permitting or licensing requirements. They continue to be hard to comply with, and vary so much by municipality. 38% are worried about increasing occupancy taxes and tourism fees. And 30% are facing local pushback or worried about facing local pushback from residents in those destinations. And then a whopping 30% here, worried about short-term rental bans or moratoriums. And then 29% of our lucky friends over here just not worried about regulatory challenges at all. So, what this continues to signal is vacation rental property managers are still under pressure from local governments. It's a great time to get involved in advocacy if you're not already. Key Data and my team in particular, we share a lot of data with people who are, trying to figure out what the impacts of bans might be and how to work with local governments and destinations instead of against them. Anne mentioned at the beginning here, Verma also more involved than ever on the regulatory front. Again, lots of regional variation on this one as well. Anne, did you want to jump in on the regulations?
No, I was just available in case there was any feedback on it, but certainly not jumping in on that. But yeah.
Okay, I saw your camera go on, so I wanted to give you a shout. Yeah, and I should have mentioned at the beginning of the webinar, we do have a Q&A box. And so if you have questions or feedback throughout this presentation, feel free to drop those, excuse me, in the chat or in the Q&A box. Okay. So if you are in a restrictive market, operational efficiency, compliance, transparency tends to become your advantage. This chart's a little all over the map here, but it's asking what regulatory challenges are you facing in your operating regions, if any. You can see a couple big highlights here are folks in the Western US are really concerned right now about strict permitting or licensing requirements. Another big trend here is that operators in the Hawaiian Islands are concerned about short-term rental bans and moratoriums. Obviously, a lot has been in the news around that region recently as well. And then Rocky Mountains continue to be worried about strict permitting and occupancy taxes as well. So I'd say if you're in a lenient market, now's the time to expand and build inventory. Obviously, you can do that in a regulated market as well, but there are a few more hoops to jump through. So let's talk about some strategies for a successful 2026. This question asks, what strategies do you plan to implement to address your 2026 challenges? And Mo said that they're going to focus on increasing marketing and distribution efforts in the next year. Also right up there is adjusting pricing strategies. Again, starting to see a little bit of optimism around rate growth, but we continue to see a lot of, consumer challenges about the economy and how people are feeling about it and booking trips. And then again, that shortened booking window making pricing challenges as well. One thing that really stood out for me is it continues to all be about the people. We're all talking about AI and software and data and all these other very important pieces to running a property management company. But at its core, we're still people working with other people. So managers are focused on guest owners and staff. We're all high up there in responses. Compared to last year, we see a pretty key trend here. The most important strategy plan for 2025 was pricing optimization. We've ended this year or pacing this year to be pretty flat in price at a US level on a year-over-year basis. Earlier in the stack, we saw that people were feeling more optimistic about pricing in 2026 than they were at this time last year. And so we can see that these strategies are shifting a little bit. Another noticeable jump here is that increased marketing efforts was ranked as #1 priority for 2026. A noticeable jump from, let's see if I can find it, from the 4th spot at this time last year. So people, still focused on pricing. It's still more important than ever, but also really worried about marketing and distribution in 2026 as well. And again, on a per property manager size basis, we continue to see how strategies evolve as portfolios grow. So those extra small to medium managers in the top left of the chart all rank pretty similarly. Marketing and distribution is #1, pricing strategies is the second, and then improved guest experience is the third. And so this large clump of managers all feeling and planning to implement the same thing. Whereas large property managers are struggling and planning more to address service consistency, so that guest experience and pricing. And so you can see how as portfolios scale, people start to think about strategies a little differently. And then there are some regional differences in those strategies as well. So in Hawaii, the West Coast, the Southeast, and the Southwest, we see a lot of managers putting marketing and distribution first, reflecting reliance on inbound demand and competitive high-value markets. In the Mid-Atlantic and Midwest, they're really prioritizing pricing execution and revenue optimization. So if you're in that market, it's not a good time to lag on adjusting your rates because your managers or your competitors are clearly focused on that. This is consistent with their higher concerns around ADR and revenue pressures. In New England, we're seeing them prioritize owner relationship management, so aligning with more fragmented ownership structures in that region. And in the Rocky Mountains, managers are focused on emphasizing guest experience, consistent with the luxury and experiential positioning in that market. And so really obviously starting to think about ski season and how you give families and travelers the experience they're expecting for that price in the Rockies. And then areas to prioritize in 2026 to achieve goals. We see that most managers, small to extra large here, are worried about operations. And then those extra small managers are worried about marketing. Also have some folks worried about guest experience, portfolio management, and tech, trending a little lower for 2026 than they were at this time last year. So again, operations and marketing continue to rise to the top as the biggest things people are focused on for 26. Okay, that was a lot of data and trends and survey responses. So let's talk about some key takeaways and what to take with you as you go back and start making or refining, hopefully, your own 2026 plans. #1, it's efficiency first moving into 26. So staffing, operations, homeowner communication, and alignment are the new growth levers as all of those things get more expensive and more challenging. Agility matters here. So mid-sized PMs that are updating prices daily, review data weekly, are outperforming their peer. That also add the heavy data users are positioned well for 2026. Alignment wins with your owners. Owner satisfaction depends on communication and results, not just promises, right? You got to deliver. And we saw a lot of people's strategies on how they plan to do that. Regional emphasis, we see efficiency is mission critical in high regulation regions and areas like Hawaii and the West. And then agility continues to win in these high competition markets like the Rockies and the Southeast. So that ability to pivot as the market and as guest change continues to be really important. On the company size front, mid-size PMs are the industry's growth engine, combining innovation with flexibility. Small operators are also out there kicking butt, though. They're worried about investing in tech and direct bookings to stay competitive. We saw they're more worried about marketing. And then large firms should focus on operational consistency and retention as they continue to manage a large portfolio, generally with a pretty large geographic footprint. And then regional takeaways here, Southeast and Southwest are demand growth leaders. Rockies, continue to be a luxury and experience driven market. And then the West and Hawaii regulation heavy, compliance and efficiency are key. Thanks everybody for joining. I know we went a few minutes past the half hour. There's a QR code here to download your free copy of the entire Outlook. It's pretty thick. There's a ton of great data and insights and recommendations for 2026. And you can find that on our website at keydatadashboard.com as well. Let me see, we've got one question in the Q&A box. Sample size of the survey again was about 240 property managers. That is on the second slide, or maybe the fourth slide at this point, and is very prominent in the full report download as well. That report also has a little more information about how we have split up the regions of the US in case you're, Virginia and you don't know if you're the Southeast or the Mid-Atlantic. Okay, thank you everybody for joining. Thanks, Anne, for joining us and telling us a little bit about how Verma can help as managers start to lay out their 2026 plans. Excited to have everybody here with us today. Enjoy the rest of the week. Bye, everybody.